if there's manipulation, how come the price has gone from 250 at the beginning of the century to over 4,000 now? And to some extent, that's a good point. But I think the point about manipulation, the big moves we see out of the blue, to the downside especially, is that it scares the public. It scares the public into acquiring physical gold and silver. I bet you hundreds of thousands, if not millions of investors yesterday who were considering to acquire, be it paper gold or even real gold, have made their decision not to. And I think it's a huge mistake.
Mario Innecco explains that despite claims of manipulation, gold's long-term rise from $250 to over $4,000 shows its enduring strength. He believes short-term price drops are designed to scare investors away from owning physical metals, a mistake in his view. Since buying gold and silver in 2002, he's learned to ignore temporary corrections and focus on fundamentals. Central banks, he argues, will keep inflating currencies, making paper money destined to fail as history has shown. Gold's chart remains bullish, and silver appears to be breaking out above key levels with strong potential ahead. He cautions that mining stocks are far riskier than holding physical metals. Innecco also notes silver shortages in the UK and says the Dow-to-gold ratio looks fragile, reinforcing his belief that tangible assets like gold and silver remain the best defense against inflation and economic instability.
Let's come to the gold market. As many of you know, I've been trying to acquire gold and silver as much as possible since 2002. And I worked in the financial markets, in the bond market, and I realized very quickly that there's a lot of shenanigans going on in the gold market. And yes, you might argue, if there's manipulation, how come the price has gone from 250 at the beginning of the century to over 4,000 now? And to some extent, that's a good point. But I think the point about manipulation and the big moves we see out of the blue, to the downside especially, is that it scares the public. It scares the public into acquiring physical gold and silver. I bet you hundreds of thousands, if not millions of investors yesterday who were considering to acquire, be it paper gold or even real gold, have made their decision not to. And I think it's a huge mistake. And I'm going to show you a chart now, a monthly chart of gold going back to 1980. And there's a few reasons why I'm showing you this. The first one is to show you how yesterday's correction doesn't even show up in this chart. Chart still looks very bullish. The second reason is to show you that since I started buying gold in 2002, yeah, it's been going up, but there's been a lot of ups and downs, even on a monthly basis. And a lot of times I could see the manipulation, and it was very frustrating, and I used to get very annoyed. But then I used to ask myself, what's the alternative here? To get rid of my real money and allow the bankers to take my savings and do whatever they want with it, lend it to the government so the government can abuse the fiscal situation. And I always came up with the conclusion that I should hold on to it and forget somewhat about the price moves. And the reason why I look at the markets and the price moves is because I enjoy following markets. But if you're not into financial markets, that's probably a good thing if you hold gold, because you forget about it, right? So that's the second point about this chart. So another reason I've become kind of immune to these rates over 20 years is that I know that our central bankers and politicians are going to continue to inflate, because there's no other way around it. Yes, they've been doing it since 1933 in the US and different dates in other countries. But eventually it's all going to end in tears because, as Mr. Buffett there said, paper money regimes always collapse with no exception. So that's my take on yesterday, right? And the same thing goes for silver. Here we go, a monthly chart of silver. And we're actually breaking out here as long as we stay above this line by the end of the month. And even where we are now above 50 on a closing basis, we're breaking out. So same for silver, of course. And the miners, it's a little different. I mean, they moved a lot yesterday, even though someone noted that the gold price yesterday just went back to where it was the day before, but the miners went down massively. So maybe there's an opportunity there, but it's very different holding miners to holding real money, I would say. And in terms of silver to gold, the silver to gold ratio, which basically is silver as a percentage of the gold price, has broken out. And what it says to me is that silver has so much potential, it's not even funny. Does that mean I'm going to get rid of my gold? No, I'm just saying you might want to think about buying a bit more silver, more affordable as well, if you can get some. Here in the UK, we've had a shortage. Even the Royal Mint doesn't have enough 1 ounce silver Britannias. And I'm going to end here with the Dow Gold ratio, which I touched upon the other day. And despite the drop in gold and the rise in the Dow yesterday, it still looks really precarious, doesn't it? And again, this is a monthly chart, not the daily and even weekly noise, right?
In this segment of his video, Mario Innecco explores the deep connection between money, gold, and human freedom. He begins by noting that authoritarian leaders like Lenin, Mussolini, and Hitler immediately outlawed individual ownership of gold, suggesting that control over money directly impacts personal liberty. He emphasizes that gold-backed money historically provided economic independence because paper currency could be redeemed for a fixed weight of gold at the discretion of the holder, giving people a stable, government-independent store of value. Even today, Innecco argues, holding physical gold grants a sliver of independence compared with ordinary bank accounts or paper investments, protecting against government overreach and the debasement of fiat currency. He warns that the current U.S. paper money system is fragile. Although gold reserves exist, citizens have no direct claim, and much has been exported since 1948. Thus, while gold may offer only partial security, it remains a critical safeguard against economic instability and the collapse that historically follows purely paper-based money systems. In essence, Innecco links gold ownership to personal liberty, stability, and protection from the inevitable failures of fiat currencies.
Is there a connection between human freedom and a gold redeemable money? At first glance, it would seem that money belongs to the world of economics and human freedom, to the political sphere. But when you recall that one of the first moves by Lenin, Mussolini, and Hitler was to outlaw individual ownership of gold, you begin to sense that there may be some connection between money redeemable in gold and the rare prize known as human liberty. Also, when you find that Lenin declared and demonstrated that a sure way to overturn the existing social order and bring about communism was by printing press paper money, then again you are impressed with the possibility of a relationship between a gold-backed money and human freedom. In that case, then certainly you and I as Americans should know the connection. We must find it even if money is a difficult and tricky subject. I suppose that if most people were asked for their views on money, the most universal answer would be that they didn't have enough of it. That's true. In a free country, the monetary unit rests upon a fixed foundation of gold or gold and silver independent of the ruling politicians. Our dollar was that kind of money before 1933. Under that system, paper currency is redeemable for a certain weight of gold at the free option and choice of the holder of paper money. Redemption rights, or redemption right, well, that's being able to convert the paper currency into money, ensures stability. The redemption right gives money a large degree of stability. The owner of such gold redeemable currency has economic independence. And that's why I said that having gold, even in the current system that we have, where we don't have redemption rights, is really important. It does give you a sliver of independence, more independence than someone who doesn't, in my opinion, because it's much harder for them to come after this than it is for them to go after your investments or your bank accounts. And it also protects you against the debasement of the paper currency. Anyway, he can move around either within or without his country because his money holdings have accepted value everywhere, anywhere. Paper systems end in collapse. Well, and I think we're very close to it in this current dollar-led paper system. But first, let me clear away a bit of underbrush. I will not take time to review the history of paper money experiments. So far as I can discover, paper money systems have always wound up with collapse and economic chaos. Well, that sounds familiar, economic chaos. Here somebody might like to interrupt and ask if we are not now on the gold standard. This is true internationally, but not domestically. Even though there's a lot of gold buried down at Fort Knox, that gold is not subject to demand by American citizens. It could all be shipped out of this country without the people having any chance to prevent it. Well, I think since 1948, it's definitely been shipped out. That is not probable in the near future, for a small trickle of gold is still coming in. But it can happen in the future. The gold is temporarily and theoretically partial security for our paper currency, but in reality it is not. Also, currently, we are enjoying a large surplus in tax revenues.
Mario Innecco emphasizes that gold and silver are not just investments, but crucial safeguards of wealth, personal freedom, and economic independence. He explains that while short-term market manipulations and price swings may scare investors, the long-term trend for precious metals remains strongly bullish. Holding physical gold and silver provides protection against inflation, currency debasement, and government overreach, unlike mining stocks or paper money. Innecco also highlights the historical link between gold-backed money and human liberty, noting that authoritarian regimes often outlawed gold ownership to control populations. Under a gold standard, individuals had redemption rights that ensured economic stability and independence. Today, even without full redemption rights, owning physical gold still grants a measure of security and freedom that paper money cannot provide. Overall, he warns that the current purely paper-based monetary system is fragile and prone to collapse, reinforcing the importance of tangible assets for long-term preservation of wealth and freedom.